to the video lectures on Introduction to Financial Accounting. This video content are predominantly designed for understanding the basic concepts of accounting, which will be helpful for non-commerce background students. However, commerce background students can also build up their knowledge. So let's start on our topic in today's video, which is what is accounting. Now, accounting is a process of recording financial transactions pertaining to the business. Now, accounting process includes summarizing, analyzing, and reporting these transactions. Now, what it means? Now, it says that it is a process by which we start recording of financial transactions. So, this is one of the most important word, that we record financial transactions. Financial transactions might include expenses from the point of view of an organization, as well as certain amount of revenue which the company is earning. So basically, we are recording all financial transactions which relates to expenses or else certain revenue pertaining to the business. The accounting process includes also summarizing, analyzing, and reporting. So once we have record, we also require to summarize, analyze, and report this kind of transactions. So we also have to understand that accounting is recording of financial transaction, along with we require to store, we require to sort, we require to retrieve information, we require to summarize, as well as to present such kind of information. So thus, it is basically a measurement, processing, and communication of financial and non-financial information about economic entities such as business and corporations. So let's come back on the board. So here we are discussing about the term of what is accounting, and accounting predominantly we can classify. If you go through the definitions again, you will understand that it says that accounting is, there are three important components in accounting. I'll just change the color of it so that it becomes easier for you to understand. So there are three important components in accounting. First, we say it's an art of recording. If you go through the definition, you will find it's being mentioned that it's recording of transactions. So it's an art of recording transaction. The second most important point, while we define the term accounting, is the art of classification. So let me write it here. So it also talks about art of classification of business transaction. And let's talk about from the last point, which is summarizing business transaction, as what has been mentioned. So this talks about an art of summarizing business transactions. So the definition says that accounting is basically an art of recording, art of classifying or classification, and art of summarizing the business transactions. Now, if you go through this definition, these are the three major important points which has been highlighted in the particular definition. Now, what I mean by the term art of recording? Now, art of recording means that all possible, see, it is being mentioned that accounting is a process of recording financial transactions. So all possible expenses and income, I'm talking from the point of view of art of recording, all possible expenses as well as revenue. So what we are recording all form of expenses and revenue which the company is earning, expenses which the company is incurring, and revenue which the company is earning. So we are recording it in my books of accounts of that particular company. Now this recording of this particular transaction is normally done on the basis of a chronology with reference to date. That means we start on with the first date of the month, then we move on to the next date. So with reference to the dates, we normally start recording. Next comes, so art of recording means to say all possible expenses and revenue of the organization will be recorded based on the date on which it is occurring. So we are following a chronology. The next point comes is art of classification. Now what it means? Now art of classification means that all expenses of similar nature, will be clubbed together. Now what it means? That means to say that all expenses of similar nature. Now we will be discussing this particular point of time. Now once we have recorded all possible transaction, the next step comes is the art of classifying these particular transactions. Now, once we have recorded all expenses and revenue, now what we require to do, we try to group the expenses which are similar in nature under one head, and that is reason why we said that all expenses of similar nature to be clubbed together. So while we were recording, we haven't done that. We only have recorded the expenses and recorded the revenues which the company has earned. Now, once we have done recording, the next step is classification, where expenses of similar nature, so this is the most important term, expenses of similar nature are clubbed together. So are clubbed together it means that they are taken together and formed a particular head, which we say as art of classification. And the next comes is art of summarizing, where we talk from the point of view of reporting this information, reporting the information which we have collected with reference to expenses and income or revenue. So what we did, so art of summarizing is basically where we report the kind of information which we gather. Now let's discuss in details that accounting, which talks from the point of view of art of recording, classification and summarizing. Let us take an example and let's solve. Now let's explain the art of recording. Now here we find that we have recorded various transactions based on a chronology which is date. So we started on with 1st of August, then we came to 2nd of August, 3rd, 4th and 5th of August, and I can continue. Since I'm giving an example, a small example, I can continue to the entire month. I have recorded all possible expenses. Now the all possible expenses which I have recorded here, if you check, I have recorded from the point of view of a particular student. Now a student who makes certain expenses, he has purchased certain pen, there are recharge expenses with respect to internet, lunch expenses are there, he might have gone to a particular college, so transportation expenses are there, where rickshaw expenses are there, there are expenses relating to snacks, there are expenses relating to auto, there are expenses relating to metro, which is also traveling part, calculator he requires for an accounts class, he also required a scale, he might have gone to see a film. So what I did, I have recorded all possible transactions which has happened from 1st of August to 5th of August. Now from this, what we require, so what we have done basically, so with reference to date, we have recorded, so the art of recording part is done. We have recorded all possible transactions which we have incurred as a student, we have incurred for the period from 1st of August to 5th of August. Now second step is the art of classification. Now if I check pen, the expenses which I have made with relating to pen, which is 20 rupees, so let me make it give it a color. Thereafter I made an expenses relating to rubber. I also have made certain expenses relating to textbook, because I purchased a textbook. I also made an expense relating to a calculator, as well as I have purchased a scale for 5 rupees. Now if I club all this, now see, these all expenses which you have made with reference to pen, rubber, textbook, calculator and scale, can we put it under a head which I can term it as a stationery expenses? So I have made a head which I said as stationery expenses, and if I sum it up with reference to 20 rupees, addition 10 plus 40 rupees plus 200 rupees and plus 5 rupees, the total expenses incurred for 5 days, say for example, is 275 rupees. Now if I take the other parts, say recharge expenses, which is you have recharged for rupees 350 rupees, as well as if I see here film, these two expenses are, so what I said classification was all expenses of similar nature will be clubbed together. So recharge expense 350, I have gone to see a film in Inox which are 500 rupees. So can I name it as entertainment expenditure or entertainment expenses? Now entertainment expenses here is 350 rupees and 500 rupees. So the total expenses is 850 rupees if I add up. So stationery is 275 rupees, entertainment is 850 rupees. Then we also have other expenses. Say I had a lunch, so I have taken lunch, so that particular expense let me consider. So lunch is there, snacks and breakfast all are of similar nature, food expenses, dinner similar nature, snacks, also a similar type of expenditure, as well as lunch mentioned on 4th of August, which is also similar in nature. So this all can be under the head maybe food expenses. I'm talking example from a point of view of a student. So these are the part of food expenses, and if I add up, so it is 100 rupees plus, then we have 25 rupees plus 30 rupees plus 120 rupees plus 30 rupees plus 50 rupees. So the total amount comes to 455 rupees from the point of view of food. Do we have any other expenses? Yes, we have an expense where I have taken a rickshaw to go, maybe I've gone to a college, I've taken a rickshaw. So it's 25 rupees. So I've also gone to college on maybe 3rd of August where I spent 20 rupees. I have availed metro, I've gone to a certain place on 4th of August where my expenses is 15 rupees. Even I have taken bus service while coming back on 4th of August. Maybe on 5th of August I haven't gone to any other place, or or else might be I've taken my friend's car where my friend has accompanied me. So I had no expenses of transportation. So I can put all these under transport expenses head, under transport expense head, and I can say there are total expense which I have made relating to transportation for the 5 days or 4 days, whatever you talk about. It's basically the total amount is 70 rupees. So we just have given example. Now what we did from after, once we have recorded, now we have recorded all possible expenses with reference to dates, and these dates are basically what we are basically following a chronology, and we have recorded all possible transactions which we had, say for example the expenses. So once I have recorded all possible transactions, the step 2 comes. As per our theory, step 2 was art of classification. Now what we are doing basically, we are basically classifying under various heads, and these are the heads which I say is stationery expenses, entertainment expenses, food expenses, and transportation expenses. Now, so I have recorded transaction, I have classified transaction. Now let's talk about from the point of view of summarizing this transaction. Now if I talk from the point of view of summarizing these particular transactions, so if I check with reference to stationery, entertainment, food, and transport expenses, one of the most important thing, if I draw a line chart in order to find this, and I find, okay, see, entertainment expenses are the highest, your transportation expense is lowest because you are not moving out, it's a lockdown. Your entertainment expenditure is at highest. Now we can also make an intercomparison of various expenses which we have incurred. The various expenses which we have incurred, we can make an intercomparison. Like how we do. Let me move this. Okay. Now how we do. Let's, for example, let's talk about 3 months. Say June, say May. We have month of May. We have month of June and July. June. Then we had, say, for July, and we are explaining this from the point of view of August. So what all expenses we had? We had 275, 850, 455 and 70, which we have incurred in the month of August. So we had how much? 275, then we had 850, then we had 455 and 70 rupees. These are the expenses which we have incurred in the month of August as per the example which we have said. On the other side, if you check, we also have these expenses. So these are the expenses which we write out here. So in the month of May, say for example, my total expenses related to stationery was 200. In June it was 155. In July it was 175. And in August it is 275. Similarly, with respect to entertainment expenditure, it was 550 rupees in the month of May. June it becomes 750. Again in the month of July it was 450 and 850 in the month of August. Food expenses roughly will be more or less same, 400. We had 350 rupees for the month of June. For the month of July it is 440 and 450 rupees in the month of August. And transportation expenses was 150 rupees in the month of May. June it was 100 rupees, then it was 120 rupees, and today it's 70 rupees. So this is what the picture is. Now what kind of decision I can take? I can check on with respect to stationery. Okay, for stationery, for the last 4 months, what has been my expenses. So I find, okay, stationery expenses has more or less have grown high. So maybe right now classes has already started. So that is the reason why we say that your stationery expenses might have gone high. So if I want to compare with respect to my entertainment expense for the last 4 months, so I take entertainment expenses into consideration and I check with reference to for certain decision making. I find that okay, for step 1, where my entertainment expenses was highest in the month of August, now I find that my entertainment expenses over a period is going high compared to that of stationery. My entertainment expenses are going high. So from the point of view of food expenses also, I can check with reference to the months as well as food expenses which I have incurred. I can also check with reference to food expenses the kind. So you see the food expenses more or less it shows a flattish trajectory, in the sense it's more or less same. So we can make certain decision making with respect to once we have recorded, after we have recorded these particular transactions. So let me move back. So once we have recorded, so we recorded all possible transactions. After recording, we move to classification, we put certain heads, and once we have classified, thereafter we came to summarizing, where we are looking after, okay, what all expenses we have done and where we are making most of our expenses. Because if I calculate in terms of percentage, let me calculate in terms of percentage, my total expenses for the 5 days which I have given as an example is 1650 rupees, out of which if I try to calculate the percentage of expenses from the entertainment point of view, it's almost 52%. So 52% of your expenditure is on entertainment. So you require to understand, okay, I require to maybe curtail down my entertainment expenditure in coming days such that I can save a certain amount of money or can make less amount of expenses, or else my expenses are going high. You can also come up with, so this is what was my August figures. Now you can also come up with an inter-comparison between various months, from say for example from May, June, July and August, and make an inter-comparison of the expenses which you have incurred. And we find that, okay, you see expenses more or less has gone higher with respect to stationery, for food expenses, for entertainment. Food expenses is compatible flat trajectory. But if you see stationery has gone high, now I understand stationery has gone high because suddenly classes have started in the month of August. But you talk up from the point of view of entertainment expenditure is growing high very rapidly. And if you check for the month of August, your entertainment expenditure was 850 rupees, which is almost 52%. So thus, what we conclude? We conclude that accounting is basically, we do 3 important things here. Art of recording, we have recorded transaction. The next point is art of classifying, where expenses of similar nature are clubbed together. And the last part is summarizing, where we say reporting the information. So we have stored, we have sorted out, we are retrieving those information, and we are summarizing and interpreting those information. And that is the reason why we say it's a measurement, processing, communication of this financial and non-financial informations. I hope you have understood the concept. Thank you. Have a nice day.